Okay, welcome back. So now we are going to talk about how do we enter the market using the price action. So now for us to enter the market, let's for example now we are in a downtrend where we are getting higher lower lows, lower highs, lower highs, lower low, lower high. So now within the direction of the market now we get a, how do I change the color? See right here. So now how do we know? So right here now we get lower highs and lower lows. So we are in a downtrend. So we get lower highs, lower lows, and we got drop, base, drop, drop, base, drop, base, drop. So we get a downtrend, we get lower highs and lower lows, or lower lows and lower highs. And to confirm it, we get drop, base, drop. So in a drop, base, drop now we have the red candles coming down represent sellers, show that it's a drop, and the green candle here represent buyers, show that we have a pullback. So that is a base. The pullback is basically accumulation. So we got the distribution with the sellers, and we got the red candle. So we got the buyers candle of the accumulation. So in a downtrend, sellers dominance. So sellers dominance is lower low, lower highs, lower high, lower high, lower low. And we get what? The base candle. The base represent accumulation. The red candle in a downtrend represent distribution. Sellers. So the buyers represent accumulation, and the red candle represent distribution. Sellers. So we're in a downtrend. So in a downtrend now we want to identify the last time we had a accumulation. So we want to identify the last time we had a accumulation. So right here we have the low. Right here was the last time we had an accumulation. Remember, in a downtrend, the buyers candle represent accumulation. So we want to identify the close price under the high price of the last accumulation candle, which is the buyer's candle, the base. So we will place horizontal price line at the close price of the last time we had an accumulation, which is a base candle. So now once we identify that candle, we place a horizontal price line. So we place a horizontal price line right there. So we place a horizontal price line right there. So the close price is 59,66110.4. So we come back now. What we want to see, we want price to close above the last accumulation now. So we takes out that. So once the price takes out the accumulation, which is the last base candle, we want to identify where there was inefficiency. Remember, inefficiency is where we have high volume, which creating a fair value gap, which is liquidity. So right here now we add this right here. So we have the break rate. Sorry, now let's come back. So right here now we have the fair value gap. This is a fair value gap, and we break above this. So now once we break above that, we want to identify fair value gap under order block. So when the two of them combine now, so when we have the order block, which is the last candle, so now we have a rise, base, and a rally. So once we break above the last buyers accumulation in the downtrend. Then we identify the last rectangle that form at the low, which represent now a accumulation, which is now a demand candle. So now we have the order block. So right here, remember we break this right. So this is the order block. So we have order block and fair value gap combo. That is a strong sign of buyers dominance in the market. So we got the breakout. So now we zone the fair value gap. We would have zoned the fair value gap with the order block. So the price come back down into the what? Into the fair value gap. So what we are looking for? We are looking for entry there. So we would set the entry at the fair value gap. We can set the entry 50%, which is the middle of the fair value gap, and we set stop loss below the last low, which is below the last low. And we would have the take profit right here, the first take profit, and then after that, now we complete break above here, then we would scale in for us to now being in a new trend. So now this right here break, this right here we break above right here, and we break above right there, and it confirm order block and fair value gap. This pattern is known as a change in the state of price delivery, or the change in the state of price delivery in ICT or SMC. But this now is a simple thing, break and retest, where we engineer liquidity. How do we know that price? How do we know that the market engineered liquidity? By giving us fair value gap and order block. So I will be talking about order block and so forth. So now once we get the breakout of the last accumulation within the downtrend, then now on the MACD indicator we use as a tool to confirm that we had a breakout and we are now in a new trend. The MACD signal line and the histogram bar would have been above the 50 level. So let's confirm. So right here now, see the line right here, we have the price line. So let's confirm now. So right here, and we have the line right there, which is that. So the MACD and the signal line cross above. So now we would enter at the fair value gap. So right now let's clear this off. So right here we have a fair value gap. Let me put this up. So how do we enter the market now? So right here, this is now what? That is now what? That is now what? That is now what? That is support. Right here, so we have support and a breakout candle, which is an order block, and we have a fair value gap. Remember fair value gap. So right here now we have a fair value gap. You see, we have a fair value gap and we have support, and the MACD break shows that we are in a new trend. So we will now use the fair value gap for entries here, for entering the market in the trend. So right here now we see another fair value gap. Stop loss goes below here, and now we in that trend. See the MACD is still above the 0 level. So right here now we would have a entry. We have a breakout. Right here we have a breakout of this eye. We have another breakout. So the fair value gap right here. Remember that. So now we're gonna move the chart a bit. So now let me put it up. So now we have a break here. SL goes below here. And we have fair value gap. This is a strong fair value gap because the market didn't tap in, but it tapped into that order. So now we are in an uptrend. Let me X off this. So now go back Let me go right back. Let me go right back. Let me go right back to give you the concept of what I'm trying to say. So now we have a rise. We have a rise. We have a rise, which is a rally. We have a pullback. So right here we have a base. We have a rally. We have a pullback. So now we are in an uptrend. We have highs. We have higher high, higher low, and then now we break above this, so we get new higher high, right? I'm not so techie guys. So now we break this and break this, so we have fair value gap and order block we set. MACD shows us that we are in a trend. The stochastic will pull back, but once the stochastic and the MACD don't pull back below their respective average price levels, and remember the average price level for the stochastic is a 50 level and the average price level for the MACD is a 0 level. So once the MACD and the stochastic don't cross below their average price at the same time, then we are in a trend. And remember, MACD can pull back to give us an extended low, but price action, we are still inside a trend. Okay, so you use the MACD as a tool to guide you, to show you that the structure that we're in an uptrend. So now once the MACD crosses the 0 level, so now what we are looking for, we are looking for rally, base, rally. So the base candle in an uptrend is the seller's candle, and the seller's candle represent accumulation, while the buyer's candle in an uptrend represent distribution, and the fair value gap represent liquidity, and where we want to enter in the market where there is liquidity. So the fair value gap, the fair value gap that form before we have a break of structure, which is a break of a previous higher high, or break the current higher high to give us a new higher high. So that is a break of structure. Is basically we are getting a continuation of the trend, and the MACD is giving us a guide that we are still in the trend, because the MACD histogram bar and the signal line remains above 0. Remember, the red candles in an uptrend represent accumulation. So the market is accumulating, coming down and accumulating. However it's coming to accumulate, it's accumulating by orders, and then it's coming to use that order to redistribute back into the liquidity pool, which is the order block or the fair value gap. Correct? Good. I'm out.